Good morning once again. The last time we were discussing, if I remember, on the risk assessment. Okay, I think that's what we were discussing on risk assessment. And you see that at the end of the day, as an auditor, since this is an external audit that you're carrying out, of what you're going to be assessing, or you will be, or you are required, okay, to of course follow the audit, the risk-based approach system. Okay, you meant follow the risk-based approach system. Okay, when doing your external audit. Okay, what does that mean? Okay, don't forget, simply imply therefore that you're meant to quantify. You're meant to quantify the amount of risk the client exposes you. Okay, you're meant to quantify the amount of audit risk. Okay, that the client is exposed to you. Okay, and you see that's the audit risk. Okay, it's simply the case where you may end up giving an inappropriate audit opinion. Okay, a scenario where you may end up giving an inappropriate audit opinion. Okay, where the financial statement of the client are materially misstated. Okay, the chance you're going to end up giving an inappropriate audit opinion. Okay, where the financial statement of the client are materially misstated. Okay, is what referred to as the audit risk. Okay, we went ahead and say that at the end of the day, you need to, or you will be following, okay, what referred to as the audit risk model, okay, is again given us, okay, three components, okay, we have the inherent risk, okay, we have the inherent risk, we have the control risk, okay, we have the control risk, okay, and of course we do have the detection risk, okay, and you have the detection risk, okay. So essentially, okay, we're going to have the audit risk model made of those three components. Okay, we have inherent risk, you have control risk, and you have detection risk. Okay, and you see that the first two components, okay, the inherent risk and the control risk. Okay, this is referred to as the risk of financial statement misstatement, risk of financial, okay, financial statement misstatement. Okay. They refer to as the two components is what referred to as the risk of financial statement misstatement. Okay. And of course, we say that this is going to be the component, okay, that you have control over. Okay, this is going to be the component as an auditor that you do have control over. Okay, so this is where it is going to be, let's say, the balancing. Okay, it's one that balances the equation. Okay, it's one that balances the equation. Okay. So in case the client has a high risk of financial statement misstatement, if the client has high risk of financial statement misstatement, then of course you're coming by reducing, okay, your detection risk, by reducing your detection risk. Okay, what's inherent risk? Okay, what is the inherent risk? Okay, this is going to be the chance. Okay, this is going to be the risk that there could be, okay, there could be misstatements that exist on the company financial statement, okay, either individually, okay, or in aggregate, okay, assuming there is no data control, assuming there is no data controls, okay. So what the chance that assuming that there is no control, the system in quote runs on itself, okay. There is no control the company has instituted, the company has put in place, okay. What the chance you're going to end up having misstatement, okay. What is going to cause the misstatement, okay. What I mean by the sources of inherent risk, okay. Assuming there is no control, assuming there is no data controls, okay. What could be the source of the chance that the accounts of this company, okay, might be misstated, okay. That's the case here. The chance there could be financial statement misstatement that might be material, okay, either individually or in aggregate, okay, when there is no related controls, okay. That's what we mean by the inherent risk, okay. Then the other component, okay, is the control risk, okay. What's control risk, okay? The chance that as an auditor, okay, the chance that the company, okay, the control the company has put in place, the control the company have put in place, okay, they may not be able to detect, they may not be able to prevent, detect and correct misstatement on a timely basis, okay. That risk, that chance, okay, that probability, okay, that might mean that the company controls are not working, they are ineffective, okay, those controls are not working, they are ineffective, okay. What that chance, what that risk, okay, that risk is referred to as the control risk, the chance that those controls, okay, might not be able to achieve their objective, might not be able to achieve their purpose, okay, is referred to as the control risk, okay. That means therefore they are not able, the purpose, don't forget the purpose of control system, the ICS, okay, is about controlling, okay, is about preventing, detecting, and correcting misstatement, okay, on a timely basis, okay. When you apply that for if the controls of the company are not able to achieve that, okay, then you have a control risk, okay. So the first two components I've just mentioned, okay, they are part of risk of financial statement, misstatement, okay. Now the last component on detection risk, the last component on detection risk, okay. Now this, as I mentioned, this is going to be, it's about you now, okay. Don't forget, this is about the client, okay. This is about the client, okay. This is about the client, and now this is about you as an auditor, okay. This is about you as an auditor, okay. So this is about the client, the first two component, and now that the last component of the model is about you as an auditor. Okay, the chance that maybe the way you did pick the sample, okay, was ineffective. The way you did interpret the result from the sample testing is deficient. Okay, whatever it is. Okay, but it's about you. It's about your procedures. It's about your weakness in the method you're using. For example, in picking up the sample. It's about you using, for example, inexperienced auditors, okay, to do the work, okay? So it's about you as an auditor, the detection risk. And that's research in the model. This is a component you have control over, okay? So the first two components you have no control, okay? But the last component on detection risk is what you have control over as an auditor, okay? And we did say that we can split detection risk, okay? We can further say that detection risk, the detection risk, we can split it into two, okay? We have referred to the sampling risk, okay? We refer to the sampling risk, okay? And you have referred to as the non-sampling risk, okay? Sampling risk, and you have the non-sampling risk, okay? Those are the two components that do make up detection risk, okay? Or the distinction, okay? Now, the sampling risk is turns out the sample that you're going to pick that is meant to act as a representative of the population. The sample you're going to pick as a representative of the population. Okay. Once you test that sample, the result you're going to obtain, the conclusion you're going to draw from the sample, okay, might be or will be very different. Okay, if you are to subject the entire population to the same test. Okay. The sample you're going to pick, from as a representative of the population, okay, will be different, okay, from what you have, from the results, okay, that you could have obtained in case you are to subject the entire population, okay, to the same procedure, okay. The chance, therefore, the result, the conclusion drawn from the sample and the population will be different. It is referred to as the sampling risk, okay. The sampling risk, okay, is more towards how the sample was picked. Either maybe the sample was too small for the population, either the interpretation of the result of the sample was incorrect, okay, there was incorrect interpretation of the sample, okay, sample results, okay, those are more or less sampling risk, okay. In the case of the non-sampling risk, in the case of the non-sampling risk, okay, now this is where the scenario, the procedure, okay, is not because of the sample, okay, it is because of other things other than the sample that you pick, okay. Either the substantive procedure you're using, for example, okay, in test the sample, okay, the substantive procedure you're using are ineffective, okay, they are the wrong procedures in the first place, okay. It is not because of the sample, it is because of maybe maybe because of the substantive procedure that you're using that might be defective. Or maybe you're using inexperienced personnel, okay? The personnel you're using, the junior auditors you're using to help you out. They are assistant auditors, okay, you're using to help you out, okay? They are inexperienced, okay? That is not because of the sample, but because of the way you are carrying on your procedures, okay? That's the non-sampling risk, okay? The two combined give us what referred to as the detection risk, okay? Give us a detection risk, okay? And I just mentioned, okay, that this is going to be the component that is the balancing figure in the model, okay? It is the component that is balancing figure in the model, okay? And so that if the client has a high risk of financial misstatement, if the client has a high risk of financial misstatement, that is the control risk and inherent risk, okay, then of course, therefore, you need to lower your detection risk. And how do you do that? Either by increasing sample size, okay, either by carrying more substantive procedure, that is by carrying out what we call the full substantive procedures, okay, either by assigning more experienced personnel within the audit, okay. So you need to make a response, you need to respond, okay, based on the risk of financial the client risk of financial statement misstatement. You need to make a response, okay, based on that for sure, okay. And that was on the audit model. I think in the mock, I did ask you, what are the advantages? Okay, what do you benefit as an auditor if you do want to, you have to follow this particular approach? Okay, of course, it makes work easier. Okay, you're able to concentrate. Okay, you're able to concentrate on the key areas. Okay, you're able to concentrate. It makes the audit to be more focused, if you have to use that term. Okay, that you're able to concentrate. Okay, on what really matters within the audit. Okay, okay, you don't audit every area. Those areas that has high risk, okay, of misstatement, of course, you pay more attention to those areas. Okay, and it becomes much more easier to focus. The audit becomes more focused, if you have to use that term. Okay, it becomes more focused. Okay, one of the key advantage. The advantage is that now you can now be able to assign the resource. You can be able to assign resources appropriately. The resource in terms of the manpower and the resource in terms of the human personnel. Okay. If, for example, out of the assessment, you deem that inventory is of high risk, what do? Assign more experienced personnel there. Okay. At the same time, you can assign more time there. Okay. Don't forget resource in terms of time and in terms of the manpower. Okay, be able now to assess, okay, to assign, okay, to do effective resource allocation in terms of time, in terms of manpower. Okay, and of course, okay, at the end of the day, it becomes much more easier to defend your position. Okay, if, for example, the client might sue you at the end of the day, okay, don't forget, it can be sued. Okay, if the client was to sue you, then it becomes a bit easier, okay, to defend yourself in the court case. You can say that I did carry my work well, okay, and you can produce, this was my risk assessment I carried out. Okay? It becomes more defensible rather than doing things in a haphazard manner, okay, rather than doing audit in a haphazard manner. It becomes more defensible, okay, in the case of maybe a court case you've been sued, okay. So all these are advantages of following this model, okay? The advantages of following this model. Over and above that, you will be in compliance, okay, with the requirement of the ISA, okay? You'll be in compliance with the requirement of the ISA, because as per the ISA, if you're carrying an external audit, okay, then you must carry out, it must be done using the audit risk approach, okay? The risk approach, okay? So therefore, by you doing the external audit on this particular model, you are in compliance, okay, with the requirement of the ISAs, okay? I think I asked this question in the mock. Okay, this should be easy. Okay, this should be easy questions. Okay. Okay, I think that was on the risk assessment. Okay. We also think we did mention on materiality. I think we also did mention on materiality. Okay, on the concept of materiality. Don't forget, in case your question, just let me know. Okay, you can raise the unmute yourself, and also you can now use the chat. Okay, the concept of materiality. Now we see that essentially when it comes to at the end of the day, okay, when it comes to carrying out the external audit, of course, you're going to base your opinion based on to what extent you'll be based on your opinion on based on you. The concept of materiality do come in play throughout the entire audit process. Okay, the concept of materiality it do come in play throughout the entire audit process. Okay, now when we see something material, okay, I think I just this is a more also. Okay, we normally say that okay, the materiality is an expression. Materiality is an expression of relative significance, okay, of the matter to an entire context. Okay, it's the relative importance, okay, significance of matter towards an entire context. Okay. Now we say something is material. Okay, we do say that something is material if it is it is expected, okay, to influence the economic decisions of the users. Okay, it is expected to influence the economic decision of the user. Okay, that's what sound is material. But materiality is an expression of relative significance of the matter for in entire context. Okay, what do you mean by materiality? I think I also did ask you, what do we mean by performance materiality? Okay, performance materiality. Okay, performance materiality now. Okay, generally, under materiality, okay, we do come with called benchmarks. Okay, we come with the benchmarks. Okay, for example, in case you're going to be using, let's say, for example, you're going to use profit for interest tax, okay, as your benchmark, the profit before interest tax, okay. We do so in case, for example, it will be more than, let's say, 1 point. If it's going to be between 1 point, if it can be 1%, remember to be one of the benchmark is be 1%. If you're going to be using profit before interest and tax, okay, and you're going to have the level of misstatement, okay, above 1%, okay, above, just a minute. 1% or 5%? 10%. Let me check. It should be 10%. 5 to 10%.
5%.
Yes, it should be 5%. Okay, if you remember, yes, it should be 5%. Okay, then in case you're going to have you're going to be using profit before interest tax, okay, as your benchmark, and you're going to have the misstatement, okay, being above 5% of the profit before interest tax, then we can deem that misstatement to be a material misstatement. Okay. In the case of performance materiality, then as an auditor, you may want, if for example, just to go back to the audit risk, okay? If, for example, you deem that this client has a high audit risk, okay? Then you may want to decide, I want to lower my level of materiality, not increase, okay? You lower it, okay? You need to lower your level of materiality. If you're going to deviate from the benchmark, you say that instead of using 1%, okay, so use 5%, okay, let me use let's say 3%, okay? Now this 3%, okay, becomes what we mean by performance materiality, okay? It will refer to as performance materiality, okay? The deviation, okay, from the original, let me just call the original quote, okay? The original benchmark based on, as a response, okay, of the client risk assessment, okay? The deviation, okay, from the level of materiality, okay? On the class of transaction, on the account balance level, or on the disclosures, okay, that we mean by performance materiality. You're going to be deviating, okay, from the materiality levels that we already set from the beginning, okay. If you are set 5%, once as you carry out the audit, okay, you discover this client has a high risk of financial statement. Now you want to lower it, okay. You need to reduce it, okay. What do you mean by performance materiality, okay. I think this was another question that I asked you in the book. Okay, define what we call materiality and what do you mean by performance materiality. Okay. Anything else on a particular area? Any question? Okay. If it's clear, then I guess we can go to the next topic if it is clear. Okay. If there's no question, then I think we can proceed to the next topic. What's the next question? What was the next topic?
I think it was about understanding an entity and its environment.
That was the next topic. Actually, that was the next topic.
Yes. I think it was about understanding the entity and its environment.
Oh, okay. Understanding the entity and its environment, okay, which I think we did discuss the last class we made. Understanding the entity and its environment as per the requirement of ISA 315. Yes, I think we did discuss that. Understanding the entity and its environment. I think we did discuss that. Okay, unless there's a question there. We did discuss this, isn't it? As per last week. ISA 315, understanding the entity and its environment. How you quantify the risk, if I remember, how the source of the information you can use in studying the client. I think we discussed this. Did we? Yeah, you guys, we are in class last week, isn't it? We did discuss this. We did.
Yes.
Yes, I think we did discuss this. Any question there on that particular part? Okay, if there's no question, then I think, what was the next topic? What was the topic after that?
Planning an audit of financial statements.
Sorry, it was?
I think audit documentation.
Audit documentation. Audit documentation. Yeah. Okay. Audit documentation. I think audit documentation, it was, how was it? Was it still audit planning and audit documentation? I think it was audit planning and audit documentation. Okay. Audit planning and audit documentation. Audit planning and audit documentation. Okay. Of course, the audit planning, it begins all the once you get appointed as the auditor, okay? Audit planning and audit documentation. Okay, so that can be our next bit of vision. Audit planning and audit documentation. Okay, and audit documentation. Okay, I think that was the next topic, audit planning and audit documentation. Of course, audit planning, definitely at the end of the day, you begin this all the way from the time you get appointed as an auditor, okay? You foresee that would want to carry out the test of inventory at this point, okay? You will plan for it, okay? At this point in time, I'll be doing the audit of receivable. It's a high risk area, so I will be assigning person A, person B, person C to that particular section, okay? I'll issue my final audit report on this particular day, okay? So you're planning in advance. You do need to carry out an effective audit planning, okay? And such, in case you have to say this is the time I'm planning the audit, okay? Of course, at that step, okay? Of course, planning will occur throughout the entire process, okay? It's not a one-off thing, okay? Just like the case of the risk assessment, okay? It's not a one-off thing, okay? You do need to carry out assessment of the client risk throughout the audit as you become aware of the clients better and better, okay? The same applies to the planning, okay? Of course, the plan is not going to be something that is going to be static, okay? That once it's fixed, okay, it doesn't change. Okay, of course, you have to make adjustment along the way. Anyway, if we have to say that this is now when you're planning, okay, because at that point in time, we do need to come up with two documents, okay? We need to come up with two documents, okay? So at the planning step, we need to come with two documents, okay? We have called the audit strategy, and of course, you need to come with the audit plan, okay? Audit strategy, and you have called the audit plan, okay? Now, what's the difference between the two? Okay, of course, audit strategy. Okay, we know this is going to be referred to as a high-level document. Okay, it's a high-level document that more or less is going to be covering. Okay, what can I say? The core areas of the audit. Okay, it shall be covering the core areas of the audit. Okay, maybe what can I say? It's more towards a discussion. Okay, a discussion towards when do we do. What are we going to be doing during the interim audit? Okay, when can we do during the final audit? Okay, who is going to be? No, we don't discuss that in the plan. So it's more of an umbrella upon which you're going to be extracting the audit plan. Okay, it's upon which you're going to be extracting the audit plan. If, for example, we decide that we're going to be doing the audit of inventory, maybe when at what point? Okay, maybe at in the month of September, okay, that's when I'm going to be doing the audit of inventory, okay. Now here we do come and have a discussion. Who is going to be responsible for doing the audit of inventory, okay. Now we go into detail, okay. The person responsible for the audit of inventory shall be Mr. ABC, okay. Who is going to be responsible for the audit of receivable is going to be XYZ, okay. Now once you go into detail, okay, to the nitty gritty, and now you're converting the strategy into a plan. You're converting the strategy into a plan, okay. What procedures are you going to be using when doing the audit of inventory? These are the procedures you're going to be using, A, B, C, and D. Now that's a plan, okay. That's an audit plan, okay. Now that's not an audit strategy, okay. So the key distinction is more towards to what level are you going into detail, okay. To what level are you going into detail? So as mentioned, the audit strategy is a high-level document, okay, as it is upon which you're going to be extracting. It's upon which you're going to be extracting the audit plan, okay. It's upon which you're going to be extracting the audit plan, okay. Now, do we need both of them? Okay, of course, it's better. It's good, okay, that you do need to have both of them, okay, to have the audit strategy as well as the audit plan, okay. Don't forget, as we mentioned, in case you're sued, okay, these are the documents that you may want to produce in the court case. That I did my audit well, okay. You produce these are my audit plans. These are my audit strategy that I used, okay. So of course you need to document them well, okay. You need to be able to document them well, okay. So the audit plan, okay, the strategy, as the name suggests, is about giving the direction. It's about giving the strategy, okay, upon which the audit shall be following, okay. A discussion towards the timing of the audit, okay. We may want to discuss this is when you shall be doing the interim audit, this one shall be doing the final audit, okay, as well as discussing on the scope of the audit, okay. Maybe having a discussion with your team members, okay, that this is what we shall be doing, okay, during the audit plan, this is what we shall be doing, okay. During the audit, this is what I'll be doing, okay? So giving, for example, the scope of the audit, this is an external audit, okay? Therefore, the scope is defined, for example, by the requirements of the Kenya Companies Act, okay? So you make a reference, okay, to the other team members, to the entire team members, okay, to become aware that this is what is our scope of the audit, okay. So that's going to be done during the audit strategy, okay. That's an audit strategy, okay. The audit plan I've just mentioned, you're converting the strategy into an action plan, okay. The strategy becomes actionable now, okay. Converting the strategy into action plans, okay. Now the kind of audit plan, okay. Who is going to do this? Who is going to, what procedure are you going to be using, okay? What resource are you going to be using, okay? That is going to be more part of the audit plan, okay? What are the advantages? Why do you want to plan? Okay, I know that the advantages is simply just answer the question. Why do you want to plan? Okay, simple as that. Okay, why do you want to plan? Okay, effective resource allocation. Okay, to avoid that you do give concentration to the areas that are more critical. Okay, to be able to focus the resources. Okay, to be able to assign personnel to the more critical areas of the audit. Okay, why do you plan? Okay. Why do you plan? To ensure that all areas of the audit are going to be covered well throughout the entire audit process. Okay, and of course, it becomes more defensible, as I just mentioned, okay, that you can go to defend your work, okay, even in the case of a court case, okay. It's simply, why do you plan, okay? Because sometimes examiner do ask you, okay, we discuss the advantages, okay, of audit planning. Those are easy marks, okay, because the question is that why do you even plan yourself, okay? Okay, not just the audit, but why would you want to plan, okay? What are the benefits of planning? Okay, simple as that, okay? Because examiners sometimes ask you, I think in the past, I think you have seen this question, okay? What are the advantages of audit planning? These are easy marks, 3 marks, okay? That was more on audit planning, okay? On audit documentation, if you have a question, let me know, okay? On the side of audit documentation, we need to say at the end of the day, okay, it's all enough that you do have your work in writing, okay, all the communication you have, okay, all the plan you're going to be using, all the strategy you're going to be using, okay, all the evidence you're going to be receiving throughout the entire audit, you need to have them in writing. You need to have you need to document them. For how long? Okay, the recommendation is that you need to have them for 7 years, okay, so you need to have this work for at least 7 years, okay. Why do you need 7 years? Okay, just in case, you never know when someone can decide to sue you. As I think I just mentioned that. Okay, when maybe there might be someone who want to even use work itself. Okay, they may want to come and check whether you've been doing your work well. Okay, so you do need to keep your documents, the audit documentation, the audit documents. Okay, well for at least 7 years. Beyond 7 years, then of course delay defeats equity. Okay, anyway. Now in the audit documentation. We do see that at the end of the day, okay, at the end of the day, we can classify, okay, the audit files, okay, into main category. We can classify all documentations into main category. Which one and which one? David?
Yes.
Yes.
Okay, so we said classify them into, well, I don't remember the exact name.
Yes.
But I remember there was one that was as per 1 year, then there was one that was more than 1 year.
Okay, we have called the permanent audit file. We have called the permanent audit file. And
yeah,
the other one? The current audit file. We have the current audit file, permanent and the current audit file. Okay. Thank you, David. You have the permanent audit file and you have the current audit file. What is the key difference? It's simply what sort of information do these files contain? Do these audit documents contain? Okay. What is the significance of the information? Can it be used for more than one audit? Okay. If the information contained in those audit evidence, in those audit documentation, contain matter of importance that exceeds 1 year, okay, that's we can use them for more than one audit year, one audit. That implies for that is what we call a permanent audit file. Okay, the information contained in those documents. Okay, what is usefulness? Can it be applied for more than one audit? If it can be, then it can be called permanent audit file. Okay. If the information contained in those audit files, in those audit work papers, okay, or audit papers, okay, or work file, okay, is going to be of significance, of importance only for that year audit, okay, only for that particular financial year audit, then that's called, we refer to as the current audit file, the current audit files. Okay, it contains matter of significance for only that particular current year audit. Okay, for the current audit files. Okay, we give examples. For example, we have the company memorandums. Okay, memorandum of position. We have the articles of the company. Okay, the company history. We give a number of things. Company history. You can also use the engagement letter. We give a number of examples. In the case of the current audit file, we gave the current year financial statement. You can also have the minutes of the board, okay, minutes of the board of director of the company, okay. We have, what else, okay, we have report of data securitization, okay, bank confirmation letters, okay. Now all these become therefore, they're only going to be applicable, they're going to only be useful for the current year audit, okay, the current year audit. The fact was the current audit file or the current work papers, okay. I think that was on the audit documentation, okay. That I think was on audit documentation. Question on that matter? Actually, just make a mention. Don't forget the audit documents. Okay, all these work papers. Don't forget they belong to you as an auditor. Okay, they are your property in quotes. Okay, which implies therefore, if someone would want to use them, and this includes even the client. Okay, of course they do need to contact you. Okay, they cannot just share this information with anyone else. Okay. They need to seek permission from you in case they would want to share your work files, okay, with someone else, okay, but they are your property, don't forget that, okay, they belong to you as an auditor, okay, because if the client need to seek permission from you before they can share out this information to someone else, okay. Question from on that particular area? Okay, so if no question, then we go to the next topic. What was the next topic? Sorry, Ashwin?
Audit evidence.
Audit evidence, okay, thank you. Audit evidence. So next is an audit evidence. Audit evidence, and the reference ISA is ISA 500. Okay, we have audit evidence, and the reference ISA is ISA 500. Okay, now what is audit evidence? Okay, at the end of the day, okay, as an auditor, you do require to the opinion you're going to give at the end of the day, the opinion you're going to issue at the end of the day. Okay, of course, you do need to support it. Okay, you can't just give a conclusion, say that the accounts of this company they do present a true and fair view. But why? Okay, why is that the case? Okay, that you do that the accounts of the company, okay, are either they don't want to present a true and fair view, or they present a true and fair view. You need to support it. Okay, you do need to support the audit evidence. You do need the final conclusion. Okay, you're going to draw from that particular from the audit from. You do need the support, okay, or the final conclusion you're going to draw about the client financial statement, okay? You do need to support it, okay? Now, what the term to use here, okay? Now, what constitutes therefore the audit evidence, okay? What comprises, okay, audit evidence, okay? Now, that is going to be, it's a matter of judge. It's you as a matter to discern, okay? What should I be gathering, okay? In order for me to arrive at my conclusion, what should I be gathering, okay? It's simply a matter of your own personal judgment, okay? To what extent, to what depth in quote, okay? Should I go to gather this evidence, okay? The ISA, okay? Just give you guidelines, okay? It does not tell you that you need to have to gather 1,000 pieces of evidence, no, okay? It's a matter of professional judgment, okay? It's a matter of professional judgment, okay? And simply, we do say that the audit evidence is simply the information used by the auditor in arriving at the conclusion on which the auditor's opinion is based, okay? The information you're going to use, okay, upon which you're going to base the conclusion, upon which you're going to be basing your final audit opinion, okay? Any information you're going to use to draw conclusion and base your opinion on that conclusion is referred to as the audit evidence, okay? We went ahead and said, don't forget this audit file, okay? This audit file we have just discussed above there, okay? They're part and parcel of the audit evidence. Okay, the data segregation letter you receive, financial statement, okay, you have received from the client, the okay, the engagement, the articles, the history of the company, okay, all these are part and parcel of the audit evidence. But you see that when it comes to gathering of the audit evidence, of course, there are two key features you need to look for. Okay, there are two key features you need to look for. Okay, one called sufficiency, and you have called appropriateness. Okay, there are two features we need to look for. Okay, sufficiency, and here what we mean by the appropriateness of the audit evidence. Okay, we mentioned this is more towards the quantity of the audit evidence. Okay, the quantity of audit evidence. This is about the quality of the audit evidence. Okay, the quality, the quantity of the audit evidence. The quality of the audit evidence. Okay, now to us sufficiency. Okay, it's about the numbers. Okay, about how many, for example, in case, for example, you're trying to assess as whether the company motor vehicle account is complete. Okay, how many evidence should you be gathering? Okay, what individual different piece of evidence should you be gathering for? Okay, it's, as I mentioned, it's more about matter of judgment here as not done. Okay, and of course it will be influenced, of course. Okay, this will be influenced by the quality. First of all, it will be influenced by the quality of the audit evidence you have already received. Okay, if you're trying to assess, for example, okay, does this company own this motor vehicle? Okay, by you having the logbook, okay, in itself is a good sort of audit evidence. It's of high quality. Okay, that implies therefore you don't need to gather the sufficient bit of it. Okay, you don't need to gather many pieces of audit evidence to prove the company do own this motor vehicle. By the mere fact you have the logbook, okay, maybe an indication, okay, that hey, this is good, this is okay, this is good, okay. The company may be owning the motor vehicle, but in case the company has no logbook, okay, they have, for example, the invoice received from supplier, okay, they have the service history, the service history of the company, okay, the service history of this car, okay. In itself, these are weaker evidence that imply therefore you do need to gather more in terms of quantity. You do need to increase the number of evidence to support the conclusion, to support that opinion you want to drive, okay. So the sufficiency is about the quantity of the audit evidence, of course, influenced, of course, by the quality of the audit evidence that you want to gather, okay, as well as on so actually the key the difference, the quantity, okay, is more towards the quality of the audit evidence that you have been able to gather, okay. And when I say the sufficiency, okay, is a measure of the quantity of the audit evidence, is a measure of the quantity of the audit evidence, is a measure of the quantity of the audit evidence, okay. As mentioned, don't forget, it's gain reference by the quality of the audit evidence, is gain reference by the quality, okay. So influenced by, just two. It is going to be influenced by the quality of the evidence you have received so far, and of course the risk of client financial statement misstatement. Okay, if the client has high risk, that implies therefore you gather more evidence. Okay, those are again factors that do influence sufficiency. Okay, now towards appropriateness, we said that you can go ahead and subdivide them into categories. Okay, we call first is on reliability. We have reliability. How reliable is it's more towards the source, okay? It's more towards the source, okay? Where when it comes to gathering of this audit evidence, when it comes to gathering of this of the audit evidence that you received, okay? Who was the person who gave you this audit evidence, okay? Who was the person who gave you this audit evidence, okay? Is this person reliable, okay? Are they person of integrity, okay? Because if they are not, then of course, should you rely on it, then you have to be careful, okay? Because if they're persons of low integrity, okay, the nature is more towards the nature and the source of the evidence, okay? Who gave this evidence, okay? Are they reliable? Are they objective, okay? Do they have any personal, okay, attachment, for example, towards, for example, the company, okay, to understand that they might not be independent of the company, they might not be objective, okay? Therefore, that implies therefore they are not reliable source of audit evidence, okay? The next thing is on what do you mean by relevance, okay? Relevance, what's the relevance, okay? It's what do you want to prove, okay? This is the assertion you want to prove on existence, okay? Now, as you want to prove whether the motor vehicle do exist, okay? Which evidence do I gather, okay, to prove it, okay? Now, this is one way, the logical connection. It's the logical connection, okay, between the assertion you want to test, the financial statement assertion you want to test, versus, okay, versus the evidence you're obtaining, okay, trying to establish that connection. Okay, what do I want to prove? I want to prove that the company do own this motor vehicle. Okay, now what evidence do I need to gather to prove it? Okay, what evidence do I need to gather to prove that the company owns the motor vehicle? You can't, for example, okay, in case you want to prove on you want to prove on whether the company owns the motor vehicle. Okay, why would you want to have a schedule of depreciation? Okay, it will not help you out. Okay, you want to ascertain, does the company own this motor vehicle? Okay, by you having a schedule of the company, the history of this particular motor vehicle depreciation, is it going to help you out? It won't help you out. Okay, therefore it is irrelevant for that particular matter. Okay? It's irrelevant therefore for that particular context. Okay, of the relevance. Okay, on the matter of relevance. Okay, and I think I asked you to do this in the MOOC. Okay, a discussion towards the key difference between relevance and liability. Okay, I think even sufficiency, if I remember. Okay, if I think I remember, I did ask you to define these terms. Okay, towards reliability. Okay, towards reliability. Okay, we did discuss and say that there are 5 key things, okay, that will influence how reliable the audit evidence you have obtained. Okay, the 5 factors that will influence how reliable the evidence will be. Okay, we did discuss that one. One was from the company. Okay, one is from the auditor. Okay, auditor obtained evidence. Okay, that is from information evidence from the auditor. Okay, we say that it's reliable. Okay, it's quite okay. Okay, the evidence yourself you're going to be gathering, of course, to be quite reliable. Okay. However, don't forget, okay, you have to consider that information obtained from that party, okay, what do I mean by third party confirmation? The third party confirmation, it is of higher evidence, okay? It's of the highest evidence. Let me say it's one of the, it has the highest quality, okay? Let me use that term, okay? That party obtained the information, okay? That party obtained information, okay? It's much more reliable, okay? However, don't forget also, when it comes to the third party confirmation, we assuming, okay, that they do or they are objective enough, okay, they are very objective, okay, when it comes to them giving out this, when they come to giving you this sort of information, okay, when it comes to you them giving you this information, okay. Definitely, don't forget, yes, the assumption here is that this party, okay, they are independent, okay, we assume that they are independent third party, okay. Then of course, we also say that information obtained from internally, okay, from, for example, the management, okay. Yes, that the information obtained from the management, okay, it is going to be reliable, but only if in case the company internal control systems are working, okay. Information obtained from within the entity itself, okay, it will be also it will be reliable, okay. It is going to be reliable, provided, okay, this information, provided the company has effective internal control system, okay, from management or from the company internal sources, okay. But this is not more, it's not of high reliance, okay, information obtained from the management, okay. But from the internal sources, okay, that is from the employees, okay, it's more reliable in case it is the company has effective internal control system, okay, it has a working ICS, internal control system, okay. Also, you have documented evidence from versus, okay, oral versus written, okay, oral versus written, okay. And of course, we mentioned that, of course, written evidence, okay, written audit evidence, okay, it's much more reliable compared to the case of the oral audit evidence. Why? Because don't forget, this person can negate what they did, say, if it was never documented, if it was never written down, okay. So therefore, you know that this makes it easy, okay, to have future reference to that evidence, okay. Oral evidence, you can't be able to have that reference. You can't make a reference in future, okay, from that audit evidence, okay. Of course, original versus photocopy, I think you mentioned that. Original versus photocopy, okay. Is that original is again much more reliable compared to photocopy, scan document, okay. They are going to be not so reliable, okay. Original, of course, they are of higher quality, okay. They are of higher quality compared to the case of obtaining the evidence, okay, from photocopy or even fax information, okay. Anything else on audit evidence? When it comes to gathering the audit evidence, when it comes to gathering of the audit evidence, okay, when it comes to gathering of the audit evidence, there's some procedure you normally use, okay, which I think I shall repeat them throughout the process, okay. I think you've just been repeating them even when shall be doing the substantive audit procedure, okay. So the procedure you use, okay, to gather the evidence. You see that generally there are 7 procedures that you can use, okay. There are 7 procedures that you can use. We have inquiry being one of them, okay? We have confirmation, third-party confirmation. Okay, we have the use of recalculation. We have the use of inspection. We have the use of observation, okay? We have the use of substantive analytical procedures. We have the use of reperformance, okay? What does it mean? Let's say 1, 2, 3, 4. Yes, we have same procedures, okay? These are again the procedure we're going to be using when it comes to gathering of the audit evidence. Inquiry means therefore you're going to be simply be seeking information. You're going to, for example, like asking a question, okay? You're going to be seeking information, okay, from some party, okay? Seeking of information from a party is going to call the inquiry, okay? You're going, for example, go and ask the management, okay? How did you carry out the depreciation? Okay, you're simply inquiring, okay? Seek information from knowledgeable persons, okay? Both financial and non-financial, within and of course outside of the entity. Okay, seeking information, seeking assistance. Okay, of course you need to seek them from someone who is knowledgeable enough. Okay, of course you don't want to affect the reliability of the information. Okay. Now, what is calculation? Simply confirmation of mathematical accuracy. I think I mentioned this. Okay, confirmation of mathematical accuracy. You want to confirm figures. Okay, you want to confirm the additions. You want to confirm the multiplication that have been performed in a given area. That's called recalculation. Now, you do need to confirm the mathematical accuracy of some certain operations. Okay, referred to as recalculation. Okay, what is performance? Okay, is doing a procedure again. Okay, this again be evidence in the execution, okay, of a procedure done previously, okay, by either by the client, okay, but it's you who is doing it, okay. It is you as an auditor, okay, performing that procedure again, re-performance, okay, as the name suggests, okay, re-performance, okay. It's you as an auditor doing that procedure again, executing that procedure again, okay, a procedure that was previously done by the client, okay, by re-performance, okay. We have also the case of, okay, inspection, okay, the case of inspection. And inspection, simply, what does it move, okay? It is examination, okay, of documents, okay, or even mostly going to be the documents, okay. The documents can also inspected can also involve the asset. Also can be also even involve the case of the tangible assets of the company, not just the document, but also in the case of the company tangible asset. You may want to inspect them to assess, for example, to what extent is this asset maybe try to think on an example, okay, when you can carry an inspection, okay. You want, for example, to assess as whether the extent of to what extent is the company inventory damaged, okay. So you may want to carry out an inspection, okay, not just on the physical asset, but mostly is more towards the documents, okay. The inspection applies more towards the document, okay, going in detail to the documents that are going to present. Logbook, for example, okay, you may want to inspect the logbook of the company, okay, on the ownership documentation, okay. What else? We have inquiry, confirmation, there's going for calculation, inspection. Now observation, okay, it's the use of eyes, okay, the observation. You watching a procedure being done, okay. It's you as an auditor who is going to watch a procedure being done. The client say that every day we normally bank our cash, okay. At the end of the day, what is going to happen? Has the company banked the cash, okay? So it's you watching a procedure being done, okay? The use of eyes, okay? And of course, this is, as you know, this is not the best, okay? This is not going to be the best. Why? Because the client, okay, the company might want to, okay, the company might want to do the procedure because you're there, because they know you're observing, because they can see you observing what they're doing, okay? So you might think that the controls are working, for example, okay? However, in reality, they're not working. They were doing this because you are there, because you are watching them, okay? That's the main concern with the case of the observation, okay? What else? The use of analytical procedure, the use of substantive analytical procedure, okay? Now here is the use of comparisons, okay? These are both comparisons, okay? Of financial information, okay, as well as financial and non-financial information, okay. Even in case of non-financial and non-financial information, the use of comparisons, okay, is more towards the use of comparisons, okay. The use of comparison. What's the procedure? What's the key distinction, okay? And what's What's the main objective? Okay, you want to draw a conclusion. Okay, let me give you an example. If, for example, you want to assess maybe, okay, as to whether the company, there could be some misstatement that occur on the profit and loss account. You may want to, for example, make a comparison. What has been the gross profit margin of last year and what has been the gross profit margin of this year, okay? Do we have any substantial difference on the gross profit, on the net profit, or the gross profit, okay? If there is substantial difference between the gross profit of last year, okay, the margin, and this year, without any substantive explanation as to why maybe this year profit has increased, okay, and you know now business has been quite poorly, okay, then you may want to assess why is this the case? That in a year when the countries may have some economic issues, some crisis, the company seems to be doing well. It does not make any logical sense, okay? Now that's the days of the substantive analytical procedure. Okay, there is a comparison, trying to understand. Okay, as per the economics, okay, this is an financial measure. It means that the economy is doing quite poorly. Okay, therefore, if the company is doing well in terms of making more profit, then does it make sense? Okay, that would mean by days of the substantive analytical procedure. Okay. What other procedure? I think have I not mentioned the performance inspection? I think I've just mentioned all of them. Okay, there is substantive analytical procedures. Any question on audit evidence? Okay. Question? Okay, if there's no question, then I guess we can go to the next topic. What was the next topic? And by the way, these same procedures are the ones shall be using. I think we have already seen that when discussing on the substantive audit procedures. They are the same, okay, that shall be using the same procedure again be used in gathering evidence and same procedure again be using under the substantive audit procedures. Anyway, okay. The next topic was on, if there's no question, then we'll go to the next topic, which was on
Have we looked at internal controls?
I guess we have not looked at them. So the next one is on internal control.
Yeah, I guess so.
Okay, internal control. The internal control system, the internal control. Okay. Now, towards the internal control, as we did mention when we were discussing on the audit risk assessment, okay, when discussing on the audit risk assessment, we said the company, of course, one of the preconditions of an audit, okay, just to take you back, okay, one of the preconditions of an audit is that the company need to recognize, okay, or you as an auditor, you need to make sure the management are aware, okay, that it is their responsibility, okay, of putting in place an effective and operational internal control system. That is one of the preconditions of an audit, okay. I hope you should remember them, okay, that the client or the management, okay, they do recognize that they are the one responsible for setting up an effective internal control system. Now, what's the ICS, okay? All the procedures that are put in place by the company, the procedures are put in place, the processes are put in place, okay, by the client, okay, with the objective, with the purpose, okay, of ensuring that they do achieve, okay, that they prevent, okay, they do prevent, okay, prevent, correct, and detect any misstatement, okay, and by misstatement, they are either fraud or from error. So the procedure that I put, the activities put in place, the operation put in place, the process put in place by the management, okay, with that objective of preventing, detecting, and correcting misstatement on a timely basis, okay, on a timely basis is referred to as the internal control system, okay, the internal control system, okay. Now that's the key objective of having the ICS, okay, to prevent, detect, and correct misstatement on a timely basis, okay. That's the objective of having the internal control system, okay. Who is responsible? Of course, the internal auditor is one who's going to be responsible. Of course, it is the management, okay, because they do this through the internal auditor, okay. They are the one who are responsible of doing that evaluation, okay, as whether the company ICS operating effectively, okay. Of course, we as an auditor, you need to do what we call the test of control to assess whether are the controls of the client working. Okay, you want to assess the control risk element. Okay, by you testing the ICS, testing as to whether it is working. Okay, that is part of your the risk-based approach system. Okay. Now the client, okay, we said the ICS is made of 5 components. Okay, the ICS is made of 5 components. Okay, which includes the ICS is made of 5 components. Emma. Emma.
Yes.
Yeah, the ICS is made of 5 components. Okay, the first one.
I can't remember.
You forgot. You need to remember the any. Okay. Let me check someone else. Quinta.
I don't remember. Is it an ISA?
No. Hey, you guys, you forgot. Anyway, okay, let's go through it together. Okay, the ICS, okay, the internal control system of the client is made of 5 components. The first one is called the control environment. Okay, first is called the control environment. Okay, the control environment, the one of the key component of the internal control system, the control environment. Okay, what's the culture of the company? Okay, does this company, who are the managers of this company? Okay, do they adhere towards, do they in the first place support the internal control system? Okay, what's the attitude? Let me just, it is more towards the attitude. Okay, let me just say the term. It's more towards the attitude. Okay. Of the money or the culture that the company has towards the prevention, detection, and of course correction of any misstatement. Okay, how do they employ their staff members? Okay, they are sort of nepotism. Okay, they normally use. Okay, when it comes to employment of their staff members. Okay, so about the control environment. Okay, is there any conducive environment upon which maybe the internal auditor, okay, is given to work well? Do the manager, for example, okay, act on the recommendation that the internal auditor normally gives? Okay, now it's simply the environment. Okay, let's start here. Actually, okay, control environment. Okay, what's the attitude? Okay, what's the awareness? Okay, the manager normally gives towards the other employees, towards the fraud. Okay, the company has. Does this company has, for example, okay, whistleblowing mechanism? Okay, do they, if in the first place, does a whistleblowing mechanism exist towards the fraud? Okay, can someone who discover fraud be able to pass it on to the management? Okay, and if possible, without them getting known? Okay, is it possible? Okay, or does it mean in case you whistleblow, then that's the end of your the end of your life, or maybe the end of your career in the company? Okay, does the company do prevent? What's the attitude of the company towards fraud prevention? Okay, that's the first component, the control environment. Control environment. Okay. Now, have I given you ideas now on the other factors? David. David. Hey, David is not in class. Karen.
Yes.
It's Karen. Okay. So that's the first component is the control environment. Okay, that's the first component of the ICS. The next component.
I don't remember.
Oh, we can't remember. Okay. Okay. The next component of the ICS, don't forget, is the information system relevant to financial reporting. IS, okay, relevant to financial reporting. Okay, the information system relevant to financial reporting. Okay, when it comes to the extraction, when it comes to posting, when it comes to preparing, okay, when it comes to the company presenting the financial, when it comes to the extraction, when it comes to the input, okay, the processing, okay, and the output of the financial information, okay. What does a company use the ICS? Okay, does a company use the information system? Okay, how do the company initiate the records? How do the company initiate the input? Okay, how do they initiate it? Okay, how do they process the information? Okay? Do they use IT? Do they use IT system? Okay, or do they use the old book manual system of bookkeeping? Okay, In short, okay, how would the company in quotes bookkeep its do its bookkeeping? Okay, is it a manual system? Is it an IT system? Okay, what are the advantages of having the IT system? What are the disadvantages of the IT system? Okay, what are the means and measures the company put in place to address any potential issue that might occur in case they use manual system and in case they do use the IT system? If they use QuickBooks, okay, what are the flaws that exist in the QuickBook? Okay, if they use Oracle, okay, if they use the Sun system, okay, what is it in case they use what else are they going to be using? Okay, what are some of advantages and disadvantages that comes with it? Okay, is there any chance that, for example, okay, that there might be a loss of audit trail, okay, by the ICA the company is using, okay, by the system the company is using? What are some of the potential advantages of using the manual bookkeeping? Okay, can maybe the invoices, the manual invoice of this company be doctored? Is it a possibility? Okay, is this a possibility? Okay, anyway, that is the next component. Okay, is understanding of how the company initiate, process, and code their information. Okay, is it manual? Is it IT? Okay, if it's IT, what system are they using? What are the flaws for that particular system? Okay. What's the next component? You guys, I'm surprised that you can't remember this thing. Anyway, the next is, of course, the control environment. So the control activities themselves. The control activities themselves. Okay. Try to recognize, okay, what are the control activities we have here? Okay. What are the actual controls that the company is putting in place? Bank reconciliation every week. Okay. Daily banking of cash the company carries out. Okay. Having the three set of documents, okay, before the payment is made to the suppliers, the invoice, the LPO, such as local purchase order, okay. What else? The good received notes, okay. So all the control, what are the actual control activities that the company has put in place in order to prevent any chance of misstatement occurring, either an error or from a fraud, okay. So that's the control activity, the actual activities the company has put in place, okay, in order to achieve the objective of prevention, detection, and controlling, prevention, detection, and correction of the misstatements, okay. The actual control activities, the actual activities put in place, okay. As I mentioned, by the way, okay, the control activities is something active, okay, is an activity, okay. It is not a description, okay, because sometimes it can be asked, okay, what controls can you expect to exist in this particular system, okay, purchase system, okay. Don't give a description, just simply tell that these are the actual activities that can be done, okay. It's an action, okay, so it's an action, not a description, okay. And you can describe, no problem, but I've seen that in the past, so you have no idea what the control activity is an activity, okay? It's an act, okay. So what can be done? Every week the company do A, B, C, D. They do a reconciliation, okay. Every day the company normally bank the cash, okay. So it's not it's an activity, okay. So I think I've seen that to be one of the mistake I've seen you when it comes to measuring the controls, okay. The control activity is what is company doing, okay, to prevent, okay, misstatement from occurring, okay. Then you have the other component is monitoring of control, monitoring of control. Now this is about assessing, okay. Of course, the company, okay, you cannot just remain static, okay, as mentioned. It's one of the company to be keeping up with what controls are working, what controls are not working, okay. What can we do to ensure they work better, okay. They trying to monitor, okay, the control as to whether they're working or not working, okay. Where can they be fine-tuned, okay? Where can we improve on them, okay? Where can they be improved, okay? Monitoring of the controls of the company, okay? Trying to assess maybe some controls are too they were put in place 10 years ago, okay? They are not relevant for today's market. They are not relevant for today's company activities, okay? So do away with them, okay? So what are some of what procedures does the company put in place in order to ensure that they are working all through, the controls are working through the process, okay? And by monitoring of controls of the company, okay? And the last component, the entities, okay? Risk assessment, the entities, risk assessment, okay? Okay, does the client itself, okay, does the client itself has do they quantify, okay, their business risk, okay? Of course, one of the key things is more towards the business risk, okay? Do they know what is their business risk, okay? Do they have that in place already, okay? That they have a department, in course, okay, that is involved, okay, that is main mandate to assess the company business risk, okay? Where can we not, what would prevent us as a company, for example, from achieving an objective, okay? What might prevent us achieving an objective, okay? The company needs to be actively be involved in doing that, okay? Get it though. What might prevent us, for example, getting the $10 million profit target that we have, okay? And what activities have we put in place to address that problem, okay? So it is about the company itself, okay, doing its own risk assessment, okay? What, for example, might be preventing us from achieving our objective? Is there any new competition that is coming in place, okay? What are we doing as a company to ensure that we do remain at the top of at the peak, okay? What are we doing as a company to ensure that if there be a law that comes in place, that there's a new law that comes, a new law that is coming in place that might make our business to be illegal, what are we doing to diversify our operation? Okay, that's about the entry risk assessment. It's about the company itself, not you as an auditor, but the company itself doing its own risk assessment. Okay, and of course putting means in place to address any potential problem that might occur. Okay, those are the 5 components of ICS. Okay, well, I think you've seen that in the past from the past papers. Okay, we've seen them from the past papers. Okay, that these are the exam you're going to ask you. Okay, I think you've seen a 10 marks question. Okay, the exam asking you discuss 5 components of the ICS. Okay, and don't forget you should get these marks. They're free marks that you can go to get. Okay, both the ICS. Okay, and those are the 5 components of the ICS. Okay. Now, what are some of the limitations of ICS? What might prevent, okay, the ICS from achieving its objective? Okay, there's some limitations. One, of course, the cost. Okay, the simplest explanation, the cost. Okay, of course, ICS come with the cost. Okay, they're not free. Okay, they come at a cost. Okay, every contract activity is going to have a cost. Okay, it might be small in terms of costing, but it will come at a cost. Okay, in terms of money or in terms of you need to have a in quote manpower. Okay, being involved. Okay, so in some cases you can have cases where the company they don't put a control. Why? Because the cost outweighs the benefit. Okay, the cost outweighs the benefit. Okay, of course, the case of collusion. Okay, the control marks might be there, the ICS might be there very well, might be working on paper. It is simple, very good. In reality, okay, you have collusion between the employees. Okay, so they collude themselves. Okay, one of the contracts is about date segregation. Okay, prevent or having an activity being done by at least 2 persons. Okay, from beginning to the end, no one individual should be able to start and complete the activity process. Okay. But now you do what do you call, what control do you put in place? Okay, you ensure the 2 people involved, okay, in the process. Okay, but at the end of the day, if those 2 people come together, okay, with the aim of to attempt to steal from you, then the segregation duty ceases to be there. Okay, it doesn't make any sense in the first place. Okay, so that collusion, therefore, what is the person? It dwindles. Okay, it reduces. Okay, the effectiveness of the ICS. Okay. Of course, we have the control, the management override control, the management override of control, okay, override of control, okay. Okay, the management themselves, okay, they are the one who do put in place these controls, okay. They are the one who do put in place these controls in the farm, okay. So if they can override the control, then why are they in the first place? Then, okay, are they there to prevent the small fish, okay? Or the big fish don't apply. Okay, what are some of? Is it possible that can exist? Okay, we have the override of control being instituted by the manager, by the person who is going to be responsible for it in the first place. Okay. 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 I think this. Okay. I think it was one of the questions that was asked. I did ask you them. Okay. What are some of the limitation of the ICS? Okay. Of controls. Okay. I think I did ask this question, if I remember. Yes, it was part of the book. Okay. And that's what I think I had with the internal control system. Question on that topic?
Please clarify.
Yes, yes, Karen.
Yeah, are these 3 limitations the one called inherent limitation of ICS?
Sorry?
inherent limitations.
Yes, they are. So actually, yes, they are. They are. Yes, they are. Yes.
They're all 3.
No, they are more than 3 actually. I think they are almost like 7, aren't they?
Okay, I don't have those notes, so that's why I'm asking.
Oh, you don't have those notes? Hey, okay. They are, if I remember, there are almost 7 of them. Okay. If I remember, the other one was on human error. There are 7 of them. If you check on your notes, can you access the e-learning?
Yes.
Yes. If you check on the internal controls, they are not there. And if I remember, there were more than, I think there were almost 7. Yeah, if you check, if you don't get it, if you go to the e-learning and you don't get those notes, then let me know, because if I remember, there were almost 7 limitation of the internal controls. Yes, they are there.
I'll check.
Okay, okay. If you don't, then let me know tomorrow. Okay. Okay. Any other question? Okay. Then I guess I hope we can finish up tomorrow. Okay. I really hope we can go to finish up tomorrow. If we don't, then we go until Friday. But I hope we can go to finish up tomorrow. But let's see how far we shall have covered by the end of class tomorrow. Okay. In case there's no question, then I think we can meet tomorrow. Okay. Don't forget to sign off. We meet tomorrow. Okay.
We sign in the register.
Yes, yes.